Gentlemen, what I would like to do is direct one question for each one of you, and the privilege to start is with Dr. Tidu. Dr. Tidu, as the leader of the Qatar Science and Technology Park, you have seen a lot of entrepreneurs and innovators coming in, setting up, failing, and some of them succeeding. We've heard from 4 startups, and we've heard about their challenges. What counsel can you give them? Where do you see them along the journey of innovation based on what you have heard? And what counsel can you give them so that success is their outcome?
I think
Yeah, go ahead.
it's a rather tough question to answer in such a short time. It seems we are running out of time. The official opening is 5 minutes ago. I had a lot to say, but I think the messages have come through very clearly this morning. The 2 things I'd like to talk about, which perhaps we need to focus on. One is failure. Guy Kawasaki talked about failure in a very elegant and rather simple way. Now, failure in America is very easy because you're dealing with venture capital. It's your blood against their money. And you have to work really hard. If you succeed, you make money, but the angel investor makes even more money than you do, or the VC makes even more money than you do. But if you fail, you can walk away. In this part of the world, it's not so easy. We don't have any VCs. Failure is a very serious issue here. It's a matter of honor. And you have family and friends supporting you. And it's extremely tough. So one has to take a route which is much more cautious. And being cautious means you can't be obsessive about your work. And the second most thing in life when you want to succeed is to be totally obsessive about what you want to do to the point of forgetting everything else. And it's more about waking up every morning and saying, this is what I want to do, this is the only thing in life for me. And unfortunately, when you're young, that's the only thing you can do if you want to succeed. Now that's easy in a way when you have a VC-backed company, because at least there is food on the table for your family. Otherwise, it's very tough. But I think we can spend a long time talking about these issues. My advice to young entrepreneurs is to really choose something out of the box, which is unique, and it has either 2 simple switches to it. Either it's so good that it'll sell anywhere in the world, and there are projects like that. We have a few projects like that at QSTP. We've managed to create products which are of a worldwide appeal. The other is to go for a niche market along the lines of what we heard this morning. It's a very elegant project, getting a portal set up for cars. Now clearly there's a portal that can be set up for all sorts of things in Arabic with content and payment systems. And I think those are the areas one has to focus on. It's something which has an immediate impact, which can be rolled out in less than 12 months and picks up momentum. Or alternatively, it's something such a breakthrough project that you really have some technology with intellectual property in it that people would like to buy it. So with that, I will have to be excused. I've been summoned to leave, but I had a lot more to say, but maybe next time. Thank you.
Thank you, Dr. Tidu. Jonathan, a quick comment about what you were undertaking at the BBC. You talked about what you were doing, you didn't talk about the monetization. What were the expectations of the BBC in terms of monetizing all the investment they've made?
Yeah, that's a good question. So the BBC really isn't set up to make money. We are an organisation that is funded by the public. Everybody in the UK, when they buy a TV, they have to pay a certain amount of money to license that TV every year, and that's the money that comes into the BBC. So we spend the money that people have already given us. And the good thing about that really is that it frees us from, if you like, the monetization aspect of things in some ways. What it requires us to do is to look at our users, to look at how many of our users are actually getting value for their money. So they're already paying us, whether they like it or not. They have to pay that license fee every year. So the question then is, how well are we giving them value? Do they think it makes sense or not? So when we see potentially 6 million of our users who've already paid to be able to access our website, not being able to use it properly, Even if theoretically it's possible, if they did a lot of work to be able to do it themselves, they're not getting value for money. They're not being able to do the thing that they've already paid for. So it's all about investment for us, really. But even from that perspective, one of the things that's interesting to us is that we find that a lot of organisations in the UK are saying, that thing that you've created, we'd like that on our websites as well. I was at Al Jazeera and talking with QMB and various other sort of Qatari websites yesterday, and they were saying, yeah, that's the sort of thing we'd like in this region too. So we're now trying to work out, if you like, models where that could happen.
A nice problem to have, to be able to invest without having to return money to the investors. But to be fair, I think BBC has introduced a KPI which has to do with the social impact of their investment on the web.
Yeah, people need to get value for their money.
Absolutely.
That's really where it comes from.
Ahmed, you're one of the very few Qatari entrepreneurs who took on the web. Are you today, in terms of progression with Car Samsar, where you expected to be when you launched it? And how far are you from realizing the economic value that you expect?
I don't think we are, to be honest, where we are in terms of the monetization of the scheme. I think we underestimated the cost and investment required in the website in order to make it successful. There's a lot of things that we wanted to achieve. Some of the issues that you brought up are the same things that we face, but as a smaller enterprise, we don't have the ability to make that investment. Monetization is very important, especially since this is internally funded by us, the partners. In terms of development of what we want to do in terms of content, and I think in terms of changes, yes, we are. But starting a company, especially as an entrepreneur, that's not good enough. The monetization becomes very important. If you think of your money as a runway, the runway ends very quickly if you run out of money very quickly. And that's definitely the thing that we're facing right now. I think people do see the value of listing and investing and dealing with us as a website, but people are not very familiar yet with paying a subscription fee for having that service. A lot of that service is already provided from other means. People think it's simply just posting cars on a website, which is really not associated with any cost. It's very cheap. Yet driving the traffic and understanding the users and going through a lot of the research that was talked about right now requires a lot of investment. And so using that investment to come up with a product is what we've tried to achieve, but that has had a cost, and monetizing it is still, I think, a long time away from where we are.
So how long is long?
I think probably another 2 years where we can hope to be break even. I think we'll be cash flow positive before that, obviously, but it's a matter of balancing between growth, because the initial investments, especially with things like a website, the idea can be easily replicated to expand it in other parts of the region. But the initial investment is very, very high. Unfortunately, to expand, there's quite a bit of a startup cost, but there's no operating cost and things like this. And once we're able to get sort of the second round of funding that will take us to that next stage, I hope that 2 years from now we will be in a better position.
Thank you, Ahmed. Andre, you're in a very distinctive situation. Anayou is a startup, has to answer a very traditional shareholder, a telecom operator. And so, how do you manage expectations? Telecom is a business that generates relatively high margins fairly quickly, and Anayou is going to be a much longer runway in terms of returns. So how patient typically your investors are, and how do you manage their expectations?
Karim, that's a very loaded question. Considering you've started working on the project 3 years ago, I think our investors are very patient, very, very patient, and have been very, very generous, in the sense that the money that Du has invested in Anayou, in the grand scheme of things, is very, very small. Du, I think, is making over $2 billion in revenues today. The amount of money that we received is, in the tens of millions of dollars. And for an internet startup, that's a luxury. That's a lot of money. But for a telecommunications operator of due size, it's a rounding error. It's a risk. It's a bet that our shareholders are taking. Now, DO invested in anayou because DO, as an operator based only in one country, only serving the UAE, we felt it wasn't, it was too late for us to pursue international or regional expansion. And we looked into other sectors in the ICT space to see where else can we make a difference. And we identified the internet and mobile content space as one of those white spaces where we could generate a lot of money. At the same time, when we did our research, our homework to figure out, how long would it take for us to be successful in that market? I think we were very clear with our shareholders to let them know that anayou, an internet company, if you will, would be very, very different. And it would take a lot of time for us to get to a point where we're cash flow positive, where we would make a lot of money. Having said that, companies like Amazon, Facebook, and some of the other market leaders in the digital space globally took a very long time to become profitable. But they are now multi-billion-dollar companies in their own right. Many of them actually trading at north of $50 or $100 billion. And I think anayou has that kind of potential. However, that kind of potential, given the challenges that I mentioned earlier, will not be realized overnight. And I think we prepared our shareholders for that eventuality, and I think they've been very patient so far. It's been a very long and hard journey, but we've been at it for 3 years, and we think if we stay at it, we'll be successful.
For the benefit of the innovators and entrepreneurs in the room, what kind of runway you're looking at? Is this a 3-year runway before the monetization starts carrying its weight for the company, or is it longer?
I believe it's longer. It's a 5 to 7 year journey. And I think it's not atypical for even a Western venture capital funded startup. It takes 5 to 7 years to really establish yourself and start making money. The good news for Western startups is they can start going public and cashing out or selling themselves to other internet companies even before you make any money or any profit. In the Middle East, that's not the case. But again, we prepared our shareholders for that eventuality.
Thank you, Andre. Mike, your starting point is very different also, because unlike anayou or let's say Car Samsar, these were not sort of greenfield. You took the capability of a telecom operator, of a media company, and of a content company in Saudi Arabia. You put them together with a view to fast track your evolution. So I have 2 questions for you. Did the secret sauce work in your case, and what you have learned along the way, without embarrassing yourself?
Sure. Look, I think similar to Andre, I think we're very fortunate as a startup business to have very strong capital behind us from strong and committed shareholders in the region. So in a lot of senses, we're not like a normal startup. As you say, we started the business in the Saudi market, and with part of our initial investment capital, one of the first things that we did in the Saudi market was we acquired an existing business which was at that time already the largest mobile content aggregator in the marketplace and already a very strong and profitable business. So our strategy for building the business was one, to work closely with a big market, with a big shareholder initially as we got the business off the ground, but also to use some of that capital injection to buy a long-standing profitable business. Now, the mobile content market in the Saudi market space, in terms of paid content, is very strong, contrary to what a lot of people talk about in terms of the attractive nature of new applications. The content business that we run is very much focused around SMS and MMS as our cash cow, as we start to now develop the new applications for new platforms like Android and iPhone. So that is, I guess, the fortunate position we've had. On the other side of the business, as we're developing our IPTV business, this in a marketplace in terms of monetization is a lot newer, particularly in the Saudi market and in other countries around the region. I think it's fair to say, if you look at Qatar as an example, and some of what we've talked about or was talked about during the keynotes, Qatar is a really shining example of where broadband infrastructure has been set up well in order to enable IPTV to get to where it is today, and there's already a next step to take the country to a point where IPTV and interactive applications become very strong. The reason I make that point is because I would say one of the key challenges on that side of the business for us as a regional player working in the Saudi market and in many other countries is that broadband isn't broadband, which means that 1 meg of broadband isn't going to be sufficient in a lot of countries to deliver the kind of applications. So the challenge for us is that as we're developing and investing in content for these marketplaces, there's still a lot of catch up to take place on a regional basis in terms of fixed line broadband speeds and infrastructure.
Thank you, Mike. On this note, we're going to conclude our panel discussion. So, gentlemen, thank you for sharing your very candid insights and addressing, I think, the questions that the audience wanted to sort of hear your input on. So you may consider that we've concluded this session. Thank you.